Hey folks, we just want to come to you today and talk a little bit about some of the calls and emails we're getting in general questions. So Poe and I have been kicking around and sharing some of the responses via email and call, but we want to share with everybody that watches our YouTube pieces.
Our socially distanced and shaggy version.
We prefer that. We're going to avoid cutting each other's hair
for now.
For the distance.
No.
You know, a couple of folks came with, I would say, the scary word. Poe, they said, you know, this would go back a couple of days, but the D word, you know, are we on the precipice of a depression? And you're hearing a lot of folks like that. But then we have the other end of that spectrum. Some folks, particularly if they're in the small business arena where they're seeing major layoffs and having significant expectation of growing unemployment, they're thinking, are we going to head towards a depression? And then some clients are like, hey, is this going to be a V-shaped bounce? We're all over, and should we be buying out there? So, you know, we want to come to you and kind of address our thoughts in general about those two topics of, you know, the profound opportunity that might exist in the other end of that spectrum.
Well,
the D word.
I think it's really important right now. If you go looking for any amount of information, it really is a strong tilt one or the other. It seems like there's not much information in between. It's either, you know, this is the worst thing ever, or we're out of the woods and you know, don't wear sunscreen tomorrow. It's a beautiful time. And I think the truth is, it's probably somewhere in between. Obviously, I mean, you know, this is, whether like or not, the realization is we've never been in this in our, you know, any of our investors' lifetimes. Not of our career, not in our investors' lifetimes, has anybody been through this.
Right, and they said, so, well, the last pandemic we had, you know, I think we haven't had that.
Yeah. So I think with that, you know, it's a realization first and foremost is we are in uncharted territory. So there are things that everybody's trying to find out kind of on the fly and really just trying to understand it. But, you know, there are some things that I think you can look back at. You know, history is a great teacher. I mean, you can get a lot of lessons from it. And the first thing I'd say is, you know, without a doubt, we're in a recession. I mean, I think most people, you know, first, you know, a week ago was, are we even in a recession? You know, the light switch is turned off, but if it turns back on, are we out of the recession? I think the realization is we're certainly in a recessionary period. The next layer is a depression. And, you know, when I look back at historically, and the data shows is, you know, from face value, a lot of the same trends are there. Unemployment was a big issue. I mean, you had a complete cease of employment, and that's what we have now, quite frankly, which causes these issues. I think the big difference, though, there really were four factors that we learned from the 1920s and 30s that the government has, quite frankly, applied to now. And firstly, you know, in the 20s and 30s when the Depression happened, the first thing that happened was, you know, unemployment was high. It was high, you know, we might be pushing those bounds, but it's certainly as high as it is now. But it lasted for a decade. Mm-hmm. You know, 9 years after the crash, unemployment rate is still 15%. Yeah. So what the Fed is doing, what the government's doing for that is they're trying to, you know, stimulate the economy, trying to correct that by offering these checks, also by offering, you know, these loan programs for small businesses to continue a level of, whether it's actual employment or not, at least a level of income during those time periods. The second thing they did in the 20s and 30s, that was a huge mistake, is actually increase taxes, if you can even imagine that. You know, so while everybody's no longer working, the ones who were working, they increased taxes. Yeah. You know, and that proved to be pretty detrimental. I mean, you can't take people who are earning and take more money from them. It just really compounded the situation. And they lowered their spending throughout that, so they cut some programs and benefits out. So those combinations were really detrimental, and you're not seeing any of that this time. You know, the one thing that, too, for small businesses is a big deal in the Depression was they increased regulation. You know, so you think about that now. Can you imagine, like right now, well, you don't have a job. You know, right now the restaurants aren't working, but when you do open back up, you're going to have more regulation to contend with. Well, it just compounded the issue. And lastly, you know, there's a global trade issues. You know, we have some minor ones today with China, but nothing at the global aspect. So I think, you know, they are doing some things right now that they learned from their mistakes, but that also puts us in, again, uncharted territory of what are these things going to do when you put in $6 trillion. Right now, the top 20 countries so far through this have injected about $6 trillion into the system. So we don't know what that's going to come out of. There's just a lot of pieces with this. But then the opposite side of that is, They put $6 trillion in the system, and that is supporting things in a big way. And that's where we're seeing some of this recovery. It's looking like a lot of the deaths and some of the things associated with the pandemic aren't, the social distancing seems to be working. It's certainly helping flatten the curve. And so with that, things look optimistic in that regard. So there really is it a V-shape, is it a U-shaped recovery? If you're an investor, those are probably the buzzwords you're going to hear for the next weeks, if not months, possibly years, is V-shape versus U-shape. What that means is a V-shape is it goes down and it comes straight back up. And we've experienced that a little bit over the last week as we hit a bottom. We've had several green days in a row. The story's untold, is what I would say. That is certainly not over yet. So what I say is, from our perspective, this is just really, for me personally, what it does is reiterate our need for bucket-based investment strategy. I think it really just reiterates why we believe in that, is because if you're in a V-shaped recovery, bucket 3 will do well. You've seen that now. If you didn't knee-jerk react, if you stuck to the buckets and you're in bucket 3 and it goes back up, you're going to get rewarded for that. If it's a U-shaped recovery, meaning it stays static or it stays down, volatile, but doesn't really have much growth over the next months, possibly years. I think sometimes people forget years is possible. Buckets 1 and 2 will work. They are designed to do that, to produce income over those time periods. And that's why we've done it. That's why we've recommended 3 years of income in bucket 1, 6 additional years in bucket 2, is if there is a U-shaped recovery, that things don't recover fast, that you can still get a check. You can still count on income being there and not have to worry about the noise. So all that to say, it is, I think, prevalence more so. I'm getting some random calls and texts of, is this depression? Is this not? Or, the opposite to your side is it's going to go up and it's great. I think the best you can do as an investor is be prepared for either, because nobody knows what's going to happen.
Well, just to reiterate, all well said, and kind of a recap is, it's easy to want to be part of a camp.
Yeah.
And our camp is clearly telling a bucket time-tested strategy, and not join the camp.
Yeah.
And I think we as investors want to have identity of being bearish or bullish, but we as successful business people want to be prepared.
Yes.
And I think to your point, Nick, is using a bucket strategy is about preparedness. It's about accepting the fact that we can't really know. Mm-hmm. It's also about accepting that bad news or great news, as in the polls are really often trying to sell you a camp. Yeah. And preparedness is about selling you on preparing.
Yeah.
And I think those are always going to be narratives that are not as fun. They're not as salacious. They usually aren't to get the headlines, but they also can allow you to focus on raking your leaves today or working in the landscape without and being in flow. So I think well said about the D word and preparing. If we have a V-shape, let it be.
Let it be. If it's a U-shape,
bring it.
Yeah.
Bring it. Let's get prepared regardless. And I think that's the message today.
Absolutely.